Let's hit it.
And we're live.
All right. Welcome everybody to episode number 2 with Fluid in Finance with Mercury Square. My name is Ali. I got my business partner and the co-host Mark. We're back. I hope everyone enjoyed episode 1. If you did, feel free to subscribe and add a like. We're kind of doing these series so people kind of get an idea of how we pick stocks, how we enter into positions, and how we kind of manage our fund. Before we kind of move further, we got to kind of go through the disclaimer. So let me move to that next slide. Again, this presentation is for educational purposes only. We are not recommending any stocks to buy or sell, and all investing has substantial risk of large losses. So anytime you're investing in the stock market, do be very careful. Make sure that you have risk management in place. For every position you get into, this is something that every beginner trader will talk to. Know exactly where you want to take your profits and where you want to cut your losses, right? Don't go in any trade blind. Just like if you make an investment, you wouldn't invest in anything blindly. So let's go to our next slide here. Who are we? We are a boutique investment firm. We follow the CAN-SLIM trading methodology that's proprietary to Investors Business Daily and developed by William J. O'Neill. If you want to know more about the CAN-SLIM investing system, feel free to check out episode number 1. We talk about it at a high level, and you can kind of get more information on it. Definitely read about it. We go into a very high level about CAN-SLIM. It is, a tested and proven method of trading, and there's a lot of information out there. And maybe in our next episode, we'll kind of give you guys some good resources to go and learn more about the CAN-SLIM investing system if you are interested in learning more about it yourself.
That's a good idea, actually. Maybe we should do that.
Yeah, maybe we should, right?
All right,
I just thought about it.
these are our current holdings.
Sure. So let's look at them. So we kind of talked about this in episode 1, and as I was talking to Mark about it, before we went live, we'll probably do these about 2 videos a week.
Yeah.
So you guys kind of get a glimpse of how we are managing our risk positions we like and are going to stay in. And it's not just like, we're taking you from start to finish, right? And that's what we want to do, because we feel like there isn't a lot of information out there, on people that have funds. I mean, it's just like this secret thing, that people just don't like to talk about, right? And maybe because it has to do with making money, so people don't want to share their secrets. But people will give you very high level information. So we want to kind of, document this journey and show you how we kind of manage our portfolio. And like we said earlier, right? We're not telling you to buy or sell anything. This is just our journey, and how we are investing in the stock market and how we're managing our risk. We don't recommend anyone to follow what we're doing here. This is just for kind of educational purposes. So let's get into it. Let's look at ODFL.
Our biggest position. This one's been on a tear. It's really been on a tear.
Yeah, I mean, I love this, and this is something I think, Mark, I think we should, let's look at it on the weekly, right? Look at this. This is, oops.
Yeah.
And this is phenomenal, and that's a really bad line. You
I
know,
mean,
my
yeah,
computer's
I think
lagging, but
once we hit our profit target, I think we kind of wait for a pullback and slide back in there for a re-entry at a good average, and then just hold it and see what
yeah, I
happens,
mean,
because it's been performing very, very well over the past 20 months. So, and who's to say it's gonna
yeah, I
stop?
mean,
I mean, everything is in its favor fundamentally. Technically, it looks sound. We're seeing earnings increases. Everything across the board looks good. Even funds are piling in. Um,
correct.
so
Yeah, I mean, this looks wonderful. And you know, a lot of the times as Mark and I, you know, we've been doing this for a little bit, but we look at, you know, on a daily basis, we look at, or on a weekly basis, we look at hundreds of charts, right?
yeah.
And something that, you know, all kind of beginner traders should do is look at charts. And I mean, if you just look at this chart right now, I mean, this is a great looking chart, you know, without even if you didn't have any indicators on here, you didn't have the moving averages. I mean, just look at this thing. It looks unbelievable, right? I
Yeah.
mean, you definitely want to buy in. I mean, it's very important to buy in at the, you know, you always want to purchase something at the right price. That's why we always kind of, you know, make sure that we're buying right off of the pivot point. You know, it's coming off of a flat base, it's acting correctly, it's fundamentally strong. And you know, we have our risk management in place where, you know, we're taking our you know, we're taking some profit at 25%, and you know, we're looking to cut losses, you know, between anywhere from 5 to 8%, you know.
Yeah.
Um,
I think
so
for beginner traders, if there's any watching, you need to learn how to read the tape. You need to be able to read volume. You need to be able to read price action really well. Understand that they're not just candles on a screen. This is a market of buyers and sellers, real people, institutions, creating the flow of the price.
correct, correct. And yeah, I mean, I really like Old Dominion. I think definitely we'll take, you know, we'll take some profit at 25%, and maybe look at a re-entry.
Yeah.
You know, right on the, you know, on the weekly, maybe, you know, when it hits the 10, maybe a re-entry there. But you know, long term, I like this, and you know, we'll see how it's kind of acting. But overall, you know, I think I still like this industry group.
This industry group is very
Transportation
good.
and trucking is doing great. And you know,
Yeah.
as what we're seeing with the supply and demand shortage, um, you know, I mean, all these trucking companies have a lot of work, and you know, people are bidding top dollar to get them to basically you know, move their supplies. So
Yeah.
you know, the profit margins are just have been great. So, and you know, I think a lot of people are saying that, you know, we may see this going into 2022. So
And
something to
and
kind
that
of
that on its own makes it is a great catalyst. So
correct,
yeah.
correct. So definitely something that we like, and you know, something we'll kind of keep, and it's, you know, it's still acting great. You know, we got in, I think what was our average buy point on this thing? I always forget. 311, right? So we got in right around 311, and you know, it's trading great. I mean, it's trading above the 10 over here, above the 50. You know, we always wanted to be above the 200-day moving average. Overall, it's just, it looks great. So let's move on. It is still one of our largest positions. Um, so definitely, you know, once we hit our profit target, we'll definitely try to scale back a little bit on this one, and take some profits. Um, all right, oil and gas. Let's continue to Fang.
So I
Fang,
believe the last time we made a video, there was some uncertainty in the oil markets regarding a certain OPEC meeting. Results of that meeting indicated that OPEC, the oil cartel, they pretty much decided that they're going to keep the market how it is, right? They're not going to dump any of their reserves onto the market and to stimulate demand or anything. They like how things look, so things are not changing, and we're currently sitting at above $80 a barrel, so we're still heavily bullish on the oil stocks.
correct, correct. And you know, I think that OPEC meeting was kind of good for these oil companies, right? Because we're not pumping in more oil, so oil's still selling at a premium. Um, and that's great. I mean, that's just better margins for a lot of these companies.
Yeah. Yep.
So, and you can see that, right? Yeah, we can see that within the sales over here. I mean, I mean, just look at it. From December 20, we were at 769 million to almost 1.2 billion dollars. That's a 500 million dollar increase in a span of one quarter. That's
Right. Yeah.
unbelievable. And usually you don't see such a spike like that. So you've been seeing that consecutively. So
So one
that's
thing I
just
want to
a
know, one thing I want to know
good
real
sign.
quick is most of these companies, most of these oil exploration production companies, they set up their balance sheets to pretty much be what is that, antivirus? So
Yeah.
they've pretty much set up their balance sheets to be focused around oil being like $50-$55, and in an $80 world they see earnings spikes like this. And I mean, we couldn't be any happier. We're holding the names. Look, they've increased about close to $1 billion in sales in only a year.
Yeah.
So
Yeah. And I mean, market cap has increased like crazy because sales have been increasing like crazy. So um, overall, I mean, this thing looks fundamentally and technically great. And I think, we'll definitely take our profits right within our profit target. Close to within this range, right between 121 to $125. Um, and depending on how this industry group is doing, I mean, it's a top 5 industry group right now. So um, I think, I still like, and from what I'm seeing is I think oil is still doing great, and I think it will continue to probably do good towards the end of the year, and we'll see, how things change as time go. But
yep.
for now, I think it looks great, and definitely a good position to be in. Let's go into our next position, EOG.
So there's another oil name.
Yep.
And so everything we said about the last name stands true for this one. Um, I mean, the oil markets, it's just really good. There's not much we can say. Like the management teams for these companies have structured the balance sheet and spending and on things like this, the company's financials, with a focus on $50 to $55 oil. So in an $80 oil world, these companies are extremely attractive, to say the least.
All right. Right. And you can see it here. I mean, same thing, right? I mean, great sales, and then coming off this nice little cup, it's acting great on the weekly. You're still seeing, fund ownership increasing. Fundamentally, the earnings per share rating is strong. Accumulation distribution still looks good. So the funds are still buying into this thing. Um, composite rating is strong. Um, I think overall, I think this thing is still looking, pretty solid, and fairly big market cap, of almost $60 billion. We're at what, 56.82 billion. So, um, you know, good name, and I think again within that same industry group, oil and gas, um, just a solid industry group right now. Um, so let's go into this one.
Mosaic.
Mosaic. And so Mosaic, let's look at it on the daily. It basically tested, so it broke the 10. It's basically testing on the daily at the 50, and it's a little below our pivot point or our buy point. I think our buy point on this was about 38.97. We're currently at $37 on
I
this
mean,
one.
so we're pretty much break even. So
Correct. And I think we're slowly watching Mosaic. We're trying to see if this will bounce off of the 50. It's basically using the 50 moving, the 50-day moving average as you know, kind of a support area here, and it's
Yep.
just gonna kind of jump up. But you know, I don't know, you know,
Oh,
something to
this one,
watch. And
yeah, it's definitely something to watch. I'm not really too hot on Mosaic right now. I know Ali isn't
correct,
either. It was
yeah,
performing really well, but had a sudden downturn. I think it gapped down on for earnings at first, or I think that's what it was. And
correct,
since then, we just haven't seen any buyers step in. So we'll
correct.
probably
And
end up cutting Mosaic. But I mean, you guys will see on the next episode whether we decide to keep it or not.
right, and that's what kind of Mark and I were talking about. Mosaic is something where, you know, we might want to, I mean, it's, you know, about 15% of our portfolio. It is a big chunk of our portfolio, but it is, it's a little bit more volatile. And usually, when we have a bigger percentage of our portfolio in a name, we like to have a little less volatility. So we may
Yeah.
want to even scale down on Mosaic, because it's hard to handle a lot of volatility when you have, you know, a big percentage of your portfolio in a position. So,
I think
um,
one of the biggest reasons why we've decided to to kind of give it an extra chance to see if it can pull through is because the industry group it fits in really nice with the rest of our portfolio. So it adds some excellent diversification on top of the industry group being pretty strong. I mean, agriculture. There's no other part of our portfolio that um that correlates to this. So it just it's pretty nice.
Yeah, and I mean, you know, if this is something that kind of, maybe this little reversal over here, but then it, you know, it kind of jumps back up. You know, if we take out, um, you know, half our position in this thing, and you know, if it starts acting right again, maybe it's something we, you know, jump back into. But for now, I think we just have to be careful and kind of manage our risk on this one a little bit better. But you know, you guys will probably see in the next episode. You know, we'll probably have another episode next week, and you know, we'll kind of decide, you know, what we do with Mosaic. And you know, definitely not a big fan of this large little
Yeah.
volume,
Yeah.
and you can see, you know,
I think that was for earnings. I
this.
think that was a day of earnings.
Correct. And, you know, definitely, you know, saw a gap down on earnings. But, you know, earnings were great. I mean, they were
We're good.
solid,
Yeah.
but, you know, like, you know, we said in episode one, you don't know earnings. Earnings are, you know, sometimes, you know, there could be a bunch of, you know, other funds in this name. And, you know, earnings is a time where they start taking profits. You know, if you got into Mosaic a little bit earlier, you know, maybe this was a good time that you took some, you took some profit, and maybe, you know, you're trying to get back in. So we don't know, something to watch for. But if it, you know, um, if it doesn't kind of go our way, then we'll maybe cut. You know, that's where risk management will come into play, and we'll cut our losses right at around 5 to 7% and move on. So, you know, like we said, in this world, you're not always right. You know, we're wrong more than we are right. And you know, this is kind of one example of it, right? A lot of
Yeah.
people will only show you their winning trades. But the thing with us is, you know, when we get into position, we do all of our research, right? And, you know, whenever we are incorrect, we have proper risk management in place, and we'll kind of get out of that position, so we can kind of handle our losses, and make sure, you know, our winners are our big winners, and we make money there, and keep our
Yeah.
losses small. You know, so that's what, because, you know, if you have a big loss, it's hard to kind of, you know, make that back up. So
Yep.
something to watch, and you guys will kind of stay in tune next week. You guys can see, you know, what we do with Mosaic.
MGM.
MGM, yeah. um MGM, I think, still looks good. You know, I think on the daily, it's you know, and I was talking to Mark about it. MGM's like, it's coming off this little cup with a handle. It's kind of making this little stair step move over here right now.
Yeah.
Uh, and today wasn't the greatest day for MGM. But
At the
you
time, but
know,
we'll see.
yeah, but you know, we'll kind of see how this one plays out. I still like MGM. I like this industry group. You know, and I think, as we talked about in episode one, you know, Vegas is open again. And you know, I think people are getting back into, the casinos and going out. And so, I think if you look at that fundamental catalyst, it's there.
Yeah.
Um, this stock tends to be not one of the straight movers. It's definitely one of those stocks that has its share of volatility. So sometimes you just gotta kind of through some of those bad weeks to see the good weeks on MGM. So maybe this week is just not the greatest. But something to kind of watch and see how it does. But I think overall it's something we need to look at.
Yeah. I mean, you summed it up pretty well. I mean, it's pretty much a reopening trade. Vegas was super shut down for COVID.
Yeah.
But everything's opening back up now.
Yeah.
So
And I think this is something that we'll take our profits on pretty early on MGM. And I think it's pretty much made its run up. I think during COVID, right around here, it took a pretty big dump over here, but it kind of recovered, and it's been churning along. And maybe if I look at it, I think on the daily here, I think we'll definitely take our profits at within our profit target here. But we'll see how this thing kind of goes along. So let's move to our next position. So this is actually one of our newest holdings.
yeah.
This is ARIES. They're a kind of a finance investment management firm, and they're in the same industry group. And let's kind of look at this industry group really quick. They're in the same industry group as some of these big funds. You got BlackRock, T. Rowe Price, State Street. So it's in there with these funds. And overall, if you look at this, if you look at this industry group, finance investment management, it's going right. So it's doing really well. And this industry group is really strong. So we wanted to kind of get exposure into this industry group, and it's kind of rising up above the ranks. And this was a good name. We got in at the high point, on the high side of the buy point. It's coming off this little tight area over here. Came off with a small little cup with handle. And overall, I think it was a cup. The length was about smaller cup, about 31 days coming off. And we like this name. And fundamentally, I think it looks great. Sales look great. And you're seeing good fund ownership. And it's meeting the William J. O'Neill criteria here. So good name. I mean, look at this thing. I mean, if I look at it on the weekly, this thing just is phenomenal, right? It looks great. I mean, this is a good looking chart.
Yeah.
So
So we're buying in a momentum. Plus, the reason why these investment managers are performing so well, is because of the current rate of inflation. So I think they reported on CPI. I think it was today they reported on CPI. We're up about 8.6% year over year. Inflation last month was like 5.5%. So we're seeing a lot of inflation, and these investment managers, their entire business is involved with assets and capital gains. They have to appreciate in assets, otherwise they have no business. It's what they're based on. So we caught one of the leaders in the industry, Blackstone, doing good. We saw another leader in the industry, Apollo, also doing very well, very well. I mean, Blackstone's performed incredibly. Apollo's doing well also, and ARIES is one of the leaders too. So we caught it lagging behind Blackstone, Apollo, and we're gonna catch the ride.
right. And
Okay.
I think we saw Blackstone was a little extended for us.
Yeah.
So we didn't get in because we don't want a late entry on it.
Yep.
So we saw ARIES, and we like this industry group, and we like the name. And overall it was acting great, fundamentally very strong, and it was, within our buy point. So something that we kind of wanted to invest in, and a great name, bigger market cap name, almost 25 billion market cap. So, definitely something that we liked, and we took a fairly big position in this. It's about 10% of our portfolio. So yeah, so let's kind of move to our next name, and I think this one's running real nice. So let's look at our next name. This is Macy's. I think we talked about this in episode 1. At that
Yeah,
time we were
I
looking
think we
into
did.
getting into
Yeah,
Macy's. Yeah, we did. Yeah.
yeah,
We were looking into getting into Macy's, and we did get into it. I think what was our buy point on this? About $29. And this thing is just acting great. Retail department stores, they're coming back. uh, you know, um,
yeah.
they're just been doing great.
It was the pent
I
up
don't,
demand. Everybody was locked inside for super long time, forced to spend over the phone, spend their money
correct.
over the internet. So I guess what
Yeah,
happened here is the American consumer, they wanted to be in person to spend their money. So I mean, yeah, this industry group has performed really, really well. Dillard's had a pretty crazy run, and anytime
yeah,
if you go to a mall, anytime you see a Dillard's, there's a Macy's right there. So Macy's, we figured we'd get into it. It looked really good. It ticked every box for us. We liked it a lot. So here it is.
yeah. And fundamentally, I mean, the last 2 quarters have been great. You're seeing growing sales. We're also seeing growing number of funds getting into this. And I mean, right off of this little consolidation area, this thing pretty much just ran up. And I mean, your this industry group, retail department stores, took probably some of the worst beatings during the
Yeah,
last year during the pandemic. So they're looking to come back with a vengeance. And I think the average consumer is just looking to, I was talking about it on episode 1. I was at the mall, I think last week or the week before that. And usually I don't, before the pandemic, I wouldn't see a lot of people inside of Macy's, but I went to Nordstrom, Macy's, and man, it was packed.
mm,
It was just, there was
wow.
hundreds of people in there. And I mean, you can get all these things online, but I think
Mhm.
people just kind of just wanted to go and experience that, just shopping like we did before, shopping in the internet era, right? Like, so I think people just want to get out of the house, want to do something, and yeah, just kind of want that experience of shopping.
Mm,
So I think that's why you're seeing retail kind of come back a little bit, and it's doing great. So I like this. I think we'll hold on to it. Definitely hit our, once we hit our profit target here, we'll see, where we can kind of move some of our money around. But let's move to our next position, IIPR. Again, this is something that we had previously. It's a REIT. Um, and yeah, I mean, this thing is just looks great. I mean, they move slower, but fundamentally, I mean, this thing is great. It was coming off of a large cup. I mean, this cup was what,
yeah.
112 days in length, 28% in debt. I mean, sorry, deep, and just you know came off of this little cup and then kind of had this little flat base area, and then it's just looking to run up again. And they move a little bit slower, but if you look at it on the weekly, I mean, this thing looks great.
Yeah.
Um,
Always
and
respect the higher time frames.
correct. And we always like looking at the higher time frames, because that's what a lot of their institutions look at. And
And we are an
sometimes looking at the
institution.
daily. Yeah, exactly. And sometimes looking at the dailies, um you might get out of something, or you might not hold through some of the tough times, right? But if you really like a name, fundamentally, if it looks good, it's still acting right, you know, it can have a few bad days. You know, everything doesn't really move up straight in a row, right? Like, you know, there's going to be some days that, you know, there's some selling, and it
Yeah.
might be tough to hold it, but, you know, as long as it's acting right and it's within your range, you know, definitely,
There's
and it
no
hasn't
reason to
hit.
sell. Yeah.
Correct,
So
correct,
if the investment thesis doesn't change, then there is intrinsically no reason to sell, right?
correct.
But I mean, market psychology, most of the times when a stock is getting beat up, right, and a lot of people are selling and it's red, you will want to feel like you should get out of it, like you should sell. That's just what our psychology does to us. So when you look
Correct.
at a higher time frame, you get to avoid those feelings. And I think that's what's really beneficial to looking at it from that perspective. You have to be able to stomach volatility. So I mean, that's just the bottom line.
Correct. And it's very important, you know, where, you know, I think you also want to manage your risk. So for viewers that are watching, you know, we're talking about ourselves because we know our buy points and what we got in.
Yeah,
So, you know, you know, it also depends at, you know, what price you bought at, right? Like, so, you know, if it's more volatility than you can stomach, and if you've, you know, like I said, every good trader has their rules, right? Their sell rules, and their buy rules, right? So you know when you want to, and your stop rules, right? You, every position that you go into, you got to know where you want to buy, you got to know where you're going to take your profits, and you got to know where you got to cut your losses, right? So you should know that before you get into a position. And you know, in the middle you might see some volatility. So that's something that you gotta kind of have to weather. But you know, if it's definitely not meeting your risk management criteria, then definitely cut it, or, you know, take your profit. So we're talking more about ourselves here, but yeah,
nice.
you know, this thing I think still looks good. um I think our next position we want to look at Intuit, right?
Into it.
Intuit, computer software, financial. This one still looks good. You know, it's got good, you know, fund ownership. Um, you know, overall, I think this is a great name. And you know, like I was telling Mark earlier, you know, I'm definitely am seeing like some money getting poured back into like your growth names. You know,
For sure, for sure. You
um,
called it. You called it. You know what you actually made me realize? Um, when you use Tesla as a barometer to measure that, that was
right,
really smart. That was really smart because I hadn't thought of it like that. And so, I mean, the
right,
last time Tesla ran up like crazy last year, all the
right,
growth stocks went crazy. Look, I mean, at this time
right,
when Tesla made this move right here, I mean, every single tech stock just things like Zoom, literally everything. So now Tesla's making
correct.
another move like that, and so yeah, we took a position into it. Plus, it just acquired a smaller company. I think it's I forget what it is. I think it's Mailchimp, like a
Yeah.
week and a half ago. So that's a catalyst.
Right. And you know, one thing I was gonna say is like Tesla is a good, it's kind of, you know, over the last 2 or 3 years, you know, even a little bit longer than that, but Tesla has kind of been your, like, kind of like an index, not really an index, like, you know, for your growth names. So, you know, if Tesla is running, usually all your big, you know, your new growth companies are also going to run along with it. And you know, if I was looking at, you know, just looking at Tesla earlier, I mean, you know, Tesla for about, you know, a good year, was just consolidating. I mean, you know, it was just kind of within this price point, not really moving, you know. It kind of stayed within that, you know, 8 to 500 range, and it was just kind of trading, you know, I think, and mostly between like the $500 and $700 range. And you know, it pretty much broke out, you know, at this 885 level, and it just, you know, it ran. So, you know, it's kind of a good indicator that, you know, where, you know, definitely if Tesla is running, um, I've kind of noticed that, you know, slowly the money's like starting to come back into your big growth stock. So something that, you know, I've noticed, and you know, it's kind of a catalyst here. So we still like Intuit, and you know, maybe this is a position that, you know, we could look to add to. You know, I was talking to Mark earlier, we're almost in about 11 names right now. So we are, for our liking, we're a little bit more diversified than we like to be.
Yeah.
We like to be, with our portfolio, we like to be in about 8 to 10 names, and
More concentrated.
yeah, more concentrated, and definitely add to the names that we like. 11 is not a big number, but definitely, like, Mosaic, we're looking at maybe, moving some money around, or kind of, cutting the amount of money that we have in Mosaic, and moving into something that's, working a little bit better.
Hmm.
Um, so that's into it. Let's look at our next position. Google. So this is a new one that we just added. I think we talked about it in episode 1. That we're looking at adding into a position on Google, and actually we just got filled right around 3,000. And I like Google. Again, I think this is also one of a good indicator of, money slowly coming back into some of the growth names, and we're seeing that, some of the money is coming back into some of your kind of growth base. Because I was looking at, let's look at like the leading industry groups right now, right? And definitely I'm seeing a lot.
Semiconductor.
Yeah, I'm definitely seeing a lot of names, like, a lot of like, a lot of kind of computer tech services, computer software enterprises, computer software financial services specialty, right? So I'm definitely seeing like some of this, like if you look at a 3 month, you look at some of these names, right? 6 months ago, there was 89, 3 months ago, 10, 12. So you're definitely seeing 156, 104, 16. So you're definitely seeing, you know, um, in certain
Money
select
flowing
computer
back
software,
in.
yeah, money flowing back into your like your growth and your more software based companies. So and even in semiconductors, we're still seeing that chip shortage around the world. And I think semiconductors usually, we don't, we were in semiconductors before. We've kind of taken a beating on semiconductors, so we're a little bit more careful before we get into that industry group, because it is a little bit more, it's got a little bit more volatility. But
Yeah.
if you look at our computer software desktop, I mean, this industry group is definitely, I mean, the money is pouring back in. But we like Google. We've made good money on Google in the past. It trades really well, and this could be one of our. I mean, I think we're slowly adding to it. We got in right around 3,000, and I think we're looking to add at around
3,000. Yeah.
3,025, and even add a little bit more at 3,050. So this could be probably one of our largest holdings, and it could probably be bigger than Old Dominion. We just kind of are slowly watching it, and we'll just slowly add on to it. But overall, I mean, Google it's coming off of this nice little flat base. It's in the pivot. Um, you know, um, Great sales. I mean, fundamentally, Google is always, you know,
I mean,
sorry,
yeah, not enough good things can be said about Google. And
right,
they practically own a monopoly over
correct,
over search browsers. So I mean, like,
correct. And
not
it's
enough good
it's
things
it
can be said.
Yeah, and it doesn't move as fast as some of the other names, but it moves slow and steady. But it is a good name, and definitely, it is something that we could even hold on to. Take our profits, but then maybe add on a little bit later, and like right on the 10 or something. But overall, good name. The next one, this is actually, oh, sorry.
This is the
Um,
crown jewel. The crown
yeah.
jewel.
So I had seen Riot. Um, And this is more of our little bit of a gutsy play. And if you look at Riot here, I mean, it's a small position. It's about 2.3% of our portfolio.
So very
Um,
small.
Very small, but we're feeling a little gutsy on this.
So
And the reason
typically,
behind,
yeah, go
yeah,
ahead.
no, I was just gonna say the reason behind this was the recent rise in what we're seeing in crypto. So I know this, Mark, you know a little bit more about this. I'll let you kind of speak to it. Yeah.
Yeah, so recently, yesterday, Bitcoin made a new all-time high. Okay. And so we could see a possible rapid rise in price in Bitcoin. So our thinking with this position, right? Riot, Riot blockchain and the other Bitcoin mining companies historically have always outperformed Bitcoin by multiples um during Bitcoin's surge in prices, during Bitcoin's bull markets, right? Bitcoin mining companies always exceed Bitcoin's performance. So this is pretty much like an asymmetrical bet. You can think about it like that, where it's it's super low risk because we're keeping our position size small, but we're able to capture the upside in it because these assets, they're pretty speculative, right? That's why we decided to keep it to 2%. Um, but the price moves really fast, and they can do like what 4, 5, 6, 10x. So a small amount of
Yeah,
money can go a long way. It's an asymmetrical bet, and Bitcoin mining
correct.
companies always outperform Bitcoin. Plus, if we look
Yeah.
at fund growth, this fund growth isn't normal, right?
Yeah.
People decided to pile in during the summer, and now all of a sudden, like last year at this time, we saw 30 funds. Now we're seeing 250 funds. So
Yeah.
yeah,
So the money is going in here, and I mean, if you look at it, like right around last year when Bitcoin, right around this time when Bitcoin kind of rose, right? This thing just popped. I mean, right off of this cup with handle, you gain 149% real quick. It was $4 and went to 13 and almost all the way up to $60. So this one, it's not a big percentage of our portfolio because there is um greater risk reward ratio on this, but
yeah,
we liked it. It was coming off of this little cup, and what we're seeing in the crypto markets, we definitely want a little bit of exposure in that, and you can get that through this name. And yeah, I think this thing can possibly run. I mean, if Bitcoin, Ethereum, your bigger coins, start to run, this thing can just go right along with it.
go vertical.
Yeah. So I think that's about all we had for this week. I hope you guys like the videos. Do hit a like, subscribe. We're gonna try to do 2 videos every week, kind of give you guys an update of on how our portfolios look, and how we kind of break down our positions, what we look into, how we manage our risk. And like we said, everything here is just for educational purposes.
This is not
We
financial advice.
correct.
Disclaimer.
Yeah. And we're basically doing this so you guys kind of see how we're kind of breaking down these stocks. And before you invest, definitely do your research, look at everything. Don't go into any position blind, right? Don't buy something because we talk about it here, right? Definitely every position you buy, have your risk to reward ratios on. Make sure your risk is managed, and that's something every good investor will talk about. So I hope you guys like this. Feel free to give it a like, subscribe our channel, and we'll see you next week.
Yep.
See you guys.
Mercury Square signing out.
Yep.